you have to understand the implications of this sideways consolidation. So as long as we continue to hold this lower band right here, all right, now I still remember a week ago we popped above it and we closed above it, and everyone was like, oh, here we go. Gareth was wrong. It's going to break out, blah, 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 blah. And then what happens? They get the good old-fashioned rug pull, right? So that's what happens. That's the inevitability, is you have to understand the confirmation signal about how key it is. You must confirm a breakout to be a breakout, just like you must confirm a breakdown to be a real breakdown. I can't tell you how many institutions sit there waiting for you to jump the gun and go long thinking something's a breakout, only to pull the rug out from under you.
Bitcoin has been in an extremely tight range since June. In this period, the coin has failed to meaningfully react to the recent strong news. For example, it initially jumped to a high of $31,842 after the conclusion of the Ripple versus SEC case in the US. The SEC alleged that Ripple Labs had violated American laws when it raised funds in 2013. While the judge ruled that Ripple violated laws, she found that XRP was not financial security. This was seen as a positive thing for most cryptocurrencies. Bitcoin has also reacted mildly to the recent weak economic numbers. Data published earlier this month showed that the American economy created just 209,000 jobs in June, lower than the expected 230,000. Additional data revealed that the headline and core inflation dropped to 3% and 4.8% respectively. On Tuesday, data published on Tuesday showed that the country's retail sales dropped in June. Manufacturing and industrial production also fell. Further, data showed that the housing sector started cooling in June. Housing starts and building permits also dropped after rising in the previous month. These weak economic numbers mean that the Federal Reserve has a small room to hike interest rates. Analysts believe that the Federal Reserve will hike rates by 0.25% next week and then pause. According to Gareth Soloway, the Bitcoin consolidation has taken more time than expected to break out, and it has two paths to follow, either up or down. Let us now get into the video as Gareth explains his view on Bitcoin price action.
What did we see? We saw Bitcoin reversing here, and we have now retested this low. Now, the impressive, there's positives and negatives here on the chart. The positive is we're still inside of this band, right? We're still inside of this realm. The positive is also the last 2 days we've been piercing this lower band of 30,000, and they've rescued the market. They've rescued. You've had buyers come in and keep price right around that 30,000 daily close, give or take by a little bit. Today, we're up just fractionally on the Bitcoin price. All right. So again, those are some positives. The negatives are this. Look at how long we've been going sideways. Yes, this is known in technical analysis as bullish consolidation, but really bullish consolidation should break out by now. All right, you should have had a breakout. Doesn't mean it can't, but probabilities begin to shift, right? We start to say, okay, it hasn't been able to. Think about this. There's the old analogy, and I love this analogy. This is an analogy I use about resistance or support. Think about yourself. You're outside of your house. There's a fire in your house. You have your cat or your dog in there. You need to break it down, right? So you ram against that level. That's resistance. You're ramming your shoulder into it. You hit it once, it probably doesn't break down. You hit it twice, it maybe doesn't break down. By the third or the fourth point, it probably the door gives way. Okay, that's the thought process. So if we look at Bitcoin, you hit it here, you hit it here, 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 here. You even kind of got halfway in and it still didn't give way. And so what happens is, let's say there's that fire and there's that cat or that dog inside that you want to save, and you get to a point where you ram the door 50 times and it still doesn't break. What are you going to do? Well, you're going to figure out another way. You're going to maybe go around to a window. You're going to go around to the back door. You're going to leave this area and move away. And that's the thought process where if you can't break out after a certain amount of time, the path of least resistance is to, in this case, the downside. All right. So again, to summarize, Bitcoin's still within this range. But again, if we confirm below this level, you're now headed to 28,500 or so, this pivot. And if you break through that, let's talk about where we're headed. This is my target. Okay, target is 26,900, basically around 27,000. Amazing trend line. Now, I want to be clear on this. As long as this trend line holds, this one here, this white one, then Bitcoin can be bought on pullbacks. Okay, why? Well, very simply, this is an upsloping trend line connecting all the pivot lows together. That means it is an uptrend. The trend is still up. If you break this line and you start trading down in this range, the trend is not up anymore. It has failed. And now you have to think you're probably headed back. First support would be 25,000, then potentially 20,000. And eventually, if you keep breaking these pivot lows, you're going back to that 15,700 level. All right. So again, that's your summary. Now on the upside, let's just say Bitcoin eventually breaks out, which again, I'm a long-term bull. So eventually I do think Bitcoin breaks out. My upside is very simple to calculate here. You take this pivot from 2019, you stretch it right through here. This is my ultimate kind of, 6 to 12 month upside target. You could see that's a beautiful trend line through these lows right through here. And that's around 45,000. So again, if you're able to break above this level, this 31,000 and confirm, then you're headed to about 45,000. There is resistance around 35 that you'll have to monitor, but I still think, again, the momentum probably carries us up to about 45,000.
The Nasdaq has surged 34.4% this year to levels not seen since early April 2022, supported by a seemingly unstoppable rally in mega-cap growth names such as Nvidia and Meta on optimism over the potential of artificial intelligence, a U.S. economy that has proven more resilient than many anticipated, and expectations the end of the Federal Reserve's aggressive rate hike cycle is on the horizon. Gareth further talks about the second cryptocurrency Ether. The S&P 500 and the Fed's tax revenue point out that its present pattern resembles that of an incoming recession. Let us now get back into the video.
Ethereum, again, this is the beauty of it. Look at this little channel right in here. If this breaks, we head down to this level around $1,730, $1,740. If this area breaks, we're probably headed to this pivot high right up here at around 2,130. Now, one thing I want to say is, this is the beauty of it, guys. Everyone, when I go on interviews, they always ask me, well, what's your big play here? What's your thought process? What's your max downside? And my max downside still is 12,000 on Bitcoin with worst case scenario of 9,000. Now, 9,000 would be achieved only if you see a stock market collapse, because it would be a liquidity draining panic scenario, right? So people would run away from risk assets and Bitcoin would have probably a downside move sub 10,000. All right. But the bottom line again is that when you're looking at these charts, I'm in here trading long and short multiple times. Like we were short Ethereum already and we banked, and Ethereum went back up and we went short right here again, and now we're in the money. The S&P goes to the all-time highs. It's possible. I'm still a skeptic until it happens. I'm a technician. So just by default, I look at all the resistance levels that it has to get through first to get there. I look at the RSIs. I look at how extended things are. But again, the way this market has been advancing since this low in March. Now, by the way, what happened in March that kind of shifted things? I'm going to tell you. The banking crisis. We saw Silicon Valley Bank fail. We saw a bunch of these other banks panic. And what's fascinating about this is that basically the Federal Reserve and the government guaranteed deposits. That was the kicker here. So now all of a sudden, even though all of these banks are holding all this dead weight paper, they're underwater hundreds of billions of dollars, there's no risk to the consumer. The consumer can have as much money as they want at a bank, and virtually there's no risk of them losing their deposits. And that marked the change in character. If you look at where this market began this big uptrend, now you had uptrends prior, but they had big pullbacks, right? This is the uptrend here that hasn't had a big pullback, and it coexists with the Federal Reserve getting involved, basically giving the banks lots of potential liquidity so that they are made full, and there we have it. All right, so again, very interesting to see that. Now, if we go to the QQQ, fascinating chart here. We are right at the upper end. Declining government tax revenue is important, is because we're not in periods like we were in 2010 or 1980 or 2000 when we had scenarios where the government didn't have as much debt, right? Right now, we are at $32 trillion in debt for this country, and interest rates have just gone up exponentially from basically 0 to 5.25%. And so now you have $800 billion a year right now, and that's going to go up every single year, at least right now, $800 billion that are going to be influencing how much money we're paying in interest. $800 billion in interest alone. Yet we see government tax revenue falling off a cliff, okay?
The Central Markets Authority, CMA, Kuwait's financial regulator, released a circular on July 19. The regulator stated that cryptocurrency was prohibited as a form of payment in the Middle Eastern country. The circular also banned crypto investments. Offering such services to Kuwaiti residents is not permitted. In addition, the CMA stated that crypto mining was banned in Kuwait. It also forbids local regulators to issue licenses to any person or entity looking to provide cryptocurrency services as a commercial business. The latest circular follows the conclusions of a study by the National Committee for Combating Money Laundering and Financing of Terrorism. Its goal is to implement the Financial Action Task Force's FATF Recommendation 15 of the international requirements. However, the FATF does not direct countries to ban crypto. The financial regulator warned that violators would face penalties as stipulated in the country's anti-money laundering and terrorist financing laws. However, the circular clarified that the prohibitions do not apply to securities regulated by the Central Bank of Kuwait and other securities and financial instruments regulated by the Capital Markets Authority. Apart from prohibiting crypto activities in the country, the Kuwaiti regulator warned customers about the risks associated with cryptocurrencies. It stated that they do not carry a legal status and are not issued or supported. Kuwait joins the list of countries that have banned crypto payments. Turkey, Indonesia, and Thailand have made similar prohibitions. As cryptocurrency popularity grows, there are still certain people who feel threatened by its potential and would rather see it fall than harness the incredible power of its technology. Only very few countries have totally banned cryptocurrencies, while some have put up a lot of walls to mitigate the effect of cryptocurrency popularity among its people. One very core question remains, though. Can cryptocurrencies be stopped? Let us know your answers in the comment section below, and don't forget to like, subscribe, and turn on notifications. Thanks for watching.